Hey guys, this is Brandon. Welcome to my channel, Galaxydoc Market. This is my weekend analysis for the coming week for May 6th to 10th, which is next week, 2024. And it's approximately 3 p.m., actually 4 p.m. In Eastern Time as I bring you this on this May 5th, 2024. We have a lot to talk about and a lot of analysis. So the question that I'm posing, as the title insinuates, sell in May and go away with a question mark. Okay, so let's dig in, and this is going to be a fairly long video, as all my weekend videos are. And let's see what's gone in the market and what we expect going forward. Here's the disclaimer. Pause it and read it, okay? And if you agree with the disclaimer, use it for your own purposes. Check your own research, and I hope you enjoy this. Okay, so I like to start with a lot of news that are out there, just to decipher, what they're doing and not what they are saying, because you can't trust these people. So Americans continue to name inflation as top financial problem, as the Gallup poll says, and it basically went from this kind of sideways moving point, and now Americans are waking up. They're going, wait a minute. The Fed keeps saying that the inflation is being worked on, that we're not to worry about it, but then why are things costing so much? People aren't stupid. And so, it is beginning to hit people home, and the lies and the manipulations in the data are going to come home to roost. And as the consumers get tapped out, and as their credit limits are tapped out, they will stop spending money. Okay. So we need to be very careful about, what the consumers are now beginning to do. And also, are they waking up? And I think they are. Now, the other thing is on the war front, UK vows to arm Ukraine for as long as it takes. Remember a long time ago, I talked about how bankers take you to war, and all wars are created by financial instability, and we are in there. And basically, war refreshes things, and it creates increase in productivity for the arms department, and a bunch of people die, and it basically is what it is. They are to commit $3.7 billion annually, and is that enough to do what? Really, we don't know exactly what's going on in Ukraine, but you can't really trust anything that's going on over there. The media really hasn't told us exactly why this war is necessary, other than the fact that we have hyperinflation. They printed money out of thin air, and this fiat money system is near its end, and they need a monetary reset. That's what I think. And then Russia is stepping up war rhetoric on their own. They're talking about decapitation strikes. And then, of course, adding this guy, if you don't know, that is the president of Ukraine, added him to war criminal wanted list. All right. So, I mean, things are heating up, even though it may seem like there is nothing, everything's stable and everything is awesome, but it really isn't. And people are struggling. There are protests at universities, and who knows why that is. And whichever aisle you're on, you got to kind of see through the hypocrisy or the manipulation that's going on, even in our social world. Okay. So, I'm going to just tell you flat out, sell in May and go away. Well, not quite yet, because even though I've been looking for a top, we really have not hit those critical levels. Friday was a step in the right direction. So the question that I want to answer is, do we sell in May and go away? My answer to that is not quite yet. And this analysis is going to take us into ES 5150 to 5225. Those are the levels in which a lot of unfinished business needs to be taken care of before we could find a meaningful topping pattern. And I've been fooled a little bit, thinking that those levels maybe weren't going to be reached until we hit capitulation bottom. But I believe those areas are now beginning to be taken out. And so until that happens, it's not quite yet. And I'll show you what I mean going forward. Okay, so let's look at the fear and greed indicator. And the fear and greed indicator is that there is fear in the market, not extreme fear, but there is fear in the market. And the general trading public as well as the trading community itself, we're all looking for, is this the bottom? Are we going to continue? There's massive confusion. So in these states, like if you have a smaller account or you just don't want to participate, just watch. Stay in cash, that is the best place to be. But if you're nimble, if you know your levels, you can take advantage of the volatility and this wide range. We are trading in a range, but this wide band of range that we can deal with and we trade with, then, if you're experienced, I think that presents a fantastic opportunity. So we know that the Fed knows it can't cut rates, and I told you last week that it will jawbone. And they were talking about how they're going to curtail quantitative tightening at an accelerated rate beginning in June, right? And so that's what I think the market is going on. Of course, Apple earnings results, because it was better than feared. How does that even work? And then they pledged $110 billion in buybacks is what floated it. But I'm going to present you with another thesis on how the stocks actually behaved after earnings reports, such as Microsoft, Google, okay, and Meta. All of those stocks basically reported decent earnings, and some of them have popped, and then they basically retraced. And we'll go over that relationship later. Okay, now let's go over my favorite indicators, and this is the put to call ratio. And I had mentioned last week that we're going to be pulling back a little bit. And I said to pay attention to this line right here, and I think we do pull back, and it can go all the way back down to here. So while there's fear in the market, the put to call ratio is still signaling complacency in this market. Now that may be just a function of you know um, the institutions buying ahead of the summer, okay, because we have some seasonality coming up. But May tends to be a seasonally weak month, okay, and that's why that term buy sell in May and go away. Okay, and I think that some credence to that, but I think we're going to be popping or going up a little bit higher to take out those ranges that we talk about, which I'll discuss. But right now, just pay attention to the fact that the put to call ratio is actually bullish, and so this is one thing that will keep me interested in the fact that maybe there is further downside coming. Okay, because we're back into this range right here. Okay, we popped a little bit, and then they basically rescue the markets. Okay, so we're going to expect continued pullback, which coincides with this choppy market, right? It is choppy, guys. It may seem like everything's bullish one day, and then it seems like it's bearish one day. It's because we're in a massive chop with a wide range. And typically, these kind of things occur right before the market starts to pull back significantly. We just, maybe pulled back, what, 5%, and everybody's freaking out already. Now, let's look at the McClellan Summation Index. It's pointing to a short-term bottom forming this week. Okay, so the short-term bottom meaning that there's a little blip here. Okay, and I said we would enter this box area, and I think we'll chop around and then start to come down. Okay, or if May runs out and time runs out, then this is kind of telling us, hey, look, there's maybe a little bit more prolonged rally coming in. This is something that we need to pay attention. A lot of times, if you follow my channel in the past, you'll know that I'm looking for this MACD bullish crossover. So that's why I have that question: sell in May and go away. Not quite. Okay, we gotta be unbiased and agnostic, and we have to just trade what the market gives you. Okay, and then in my opinion, I think there's a little bit more upside coming, and maybe sharp, but I think we're until and unless we break out of these upper range or to the bottom of the range, this market is going to be trader's paradise. You just can't get sucked into it. Okay, now last week after FOMC, this is what happened, right? And we we successfully said, hey, look, on this pop, you're going to and drop, right? So last week, what happened? It became a bull trap, right? So then the bull trap turned into a bear trap on Friday. So markets are priced for 3 to 5 rate cuts this year. And that was the initial reaction after Powell stopped speaking. And then what followed? Okay, so this is what ended on Friday. So this is what happened on Wednesday. And then we continue to come up. And then Apple happened here, which gave it a boost. And then again, there's distributions occurring, okay, in these volumes. So we're just kind of beginning to form this area. The question is that are we able to break above this 512, okay? On the ES front, I'm looking for 5150 to 5200 and take out some of those unfinished business, as I like to call it, and I call it something else if you're following the order flow, but I'm not going to mention that in this video. But regardless, there is unfinished business. I've been harping on it, and I was kind of like, you know, even though the market, every time it went down, I was just always saying, hey, look, you know what? This wasn't taken out. We didn't spend enough time up here. And so that's basically what we're going to be figuring out, okay? So it means that we are going to continue to be in a choppy range-bound market, okay? The question is, are we going to do this and then come back and fill the gap and move higher? Um, we'll find out, and that's what you're tuning in for, okay? So let's do a quick S&P 500 sector analysis. Okay, so this is kind of the conglomeration of all the S&P sectors. Notice that we are at an inflection point, okay? So this basically is a 50-period moving average. We basically got stopped dead cold in most of the discretionaries, communications, okay? And then technology is kind of in the no man's land. Even though they gapped higher, the 50 SMA looms large. And so this is kind of where you got to be careful because, you know, clearly, is it overhead resistance that's occurring, or is it setting up for the further additional move higher? Okay, seasonality wise, it would dictate that you know, there's going to be further downside to come, and I believe that may be true. Okay, and you know, I'm biased in that way, but not until we take out what 52.25. Somewhere between here. We're off to a good start. Friday we took out like 51.63. We closed above there. So clearly we are working out those excess unfinished business as we're talking about. Now, which industries basically are showing, even though they're showing black candle, this is clearly above um, all the moving averages, which is the industrials, okay? These are all defensive sectors. Materials, again, failed off of the 20 SMA. And then energy basically got above the 50, but there's a 20 SMA looming overhead trying to make that death cross, right? And so, I mean, it's like when you look at these, there's nothing to be said other than it's bearish so far, right? But the consumer staples are above all the moving averages. Again, defensive sectors are showing some bullish actions, okay, all about the moving averages. So is there a sector rotation, or is this a rotation into defensive sectors? Okay, financials got stopped dead cold with two black candles, which are bearish off of the 50 SMA. Okay, and then of course real estate is kind of in no man's land, above the 20 but below the 50. So let's dig down deeper. Is there a sector rotation that is going on? Let's find out. You know, there's a lot of great things at stockcharts.com. It's one of my favorite sites, and I'm not being paid by them. But one thing that you might want to do is dig down into their sector summary, which is basically the S&P 500 sectors that I'm following. And you can group these guys, you know, based on, you know, sector strength and, you know, all of those other good stuff, right? And so what we have is basically a situation where industrial sector fund, communication services sector, utilities, financials, and technology are basically leading for that the last couple of days, right? And then materials, consumer staples, discretionaries are kind of neutral, but the real estate sector is really lagging. And you can drill down. So we want to say, hey, okay, so there's strength in technology sector. Okay, what are the strongest? So when we go here, we're looking at the semiconductors have the strength, obviously, renewable energy like the solars, and then you can dig down in and find all of these charts, okay? Now, I'm not going to go deeper into this, but what I want to really find out is, do we have in these sectors, what are the strongest and what are the weakest? And clearly you can see the strength is in the utility, financials, and tech, although tech is not at the top, okay? Tech is actually on the way down right now, okay? And so what that tells me is that, is there a sector rotation into the consumer staples, discretionary, healthcare sector, energy sector is fairly weak, and those sectors, okay? And so I don't see a clear-cut delineation in terms of sector rotation, but at this point, it is something that you need to drill down into and look at what is the strongest, okay? So industrial sectors, okay? So there's heavy construction and building materials. It's what the strongest is. It's marine transportation, heavy construction. Airlines have strength. And so when you dig in, you can see all of these sectors that are here, and you can group them. And We discuss these a lot, because the way I want to run my community is education based, not so much on alerts and things like that. I want to teach you how to fish, okay? And this is what we're going to be doing going forward. All right? So that's kind of what we're looking at. I still think that there isn't a clear-cut delineation of sectors that are rotating per se, but these will kind of give you clues. Utilities are strong right now, and then consumer staples. Rest of it is kind of in no man's land. It could go either way, so caution is advised. Okay. So next week we are going to be doing continuing the meat of the earnings sessions, and there's a whole slew of great earnings that we're going to be looking at that I'm interested in. I'm interested in Microchip. I'm looking at Rivian, Walt Disney, Datadog. Okay, these are all heavy hitters, and I may do some analysis on those to help you guys. Upstart, I'm very, very interested in. Win, I'm interested in. And Uber, Shopify, Affirm, very interested in, folks. Um, ARM's going to be one of those AI plays, and Airbnb, I'm super interested in. We'll go over the charts on that one today. And then we are looking for Roblox, which is one of my favorites during earnings seasons. I'm not saying it's going to be long or short, but I'll be digging down into that, and that's something you guys can look forward to. And so Unity is going to be big due to their AI and, in that space. And so these are kind of what we're looking at, and we'll continue to do some analysis on those. Okay, now the dead cat bounce is either ending or will end by Friday 5-3. Okay, will you be ready for the next down leg? And this was a question that I posed. Okay, but all of those things, we have to be flexible, and so um, by May 3rd, all we got was a bounce in the market, and we're still range bound. So that means sell in May and go away. Another checkbox in. You got to be patient and you got to be careful at this point. Okay. Um, so what we want to do at this point is, before I go into my summary, is to do the sector, not sector, but technical analysis. Let's go. Let's go do that. Let's start with the TNX, my favorite, the 10-year treasury yield. Folks, 10-year treasury yield, as I said, the Fed is going to try to manipulate this thing down further. Now, we got a little bit of a tail candle off of this trend line, but you can see this kind of a fan arc like trend lines, and it's basically coming in to test the bottoms of the range. I think that it's possible to come down to the 43.1. Fed is targeting 42.5 to declare victory and to save the banks, because as the 10-year treasury yield rises, the bank's insolvency continues higher. All banks, in my opinion, right now are having deposit outflows, and they're having problems with their treasuries that they're holding. All the bonds, they're worthless, but they're pretending that it has value. Talk about manipulation. This is why we watch TNX. TNX, guys, is inversely correlated to the market. Rising 10-year treasury yield is very, very bad for the market. You can look at it intraday. If you don't trust me, just watch it on 1 minute basis on TNX, okay, on your platform of choice, and see what happens when the TNX starts rising, and then it starts to come down. And you can see the blatant manipulation that exists on those areas. US dollar, same thing. Rising US dollar is negative for the market, and falling US dollar is positive for the stock markets. And realistically, we kind of poked above that box, and we poked below this trend line and found support at what? At the 50 SMA. That's what that blue line is. And then we have this long tail candle. So is this dollar manipulation down, trying to create a little bit of that relief bounce? Remember the dead cat bounce. We called it right 2 weeks ago on Monday. Okay, and those of you who also verified on your own benefited greatly into that. Okay, so now we have this reversal candle. What's going to happen? So we look at this. The RSI on this leg down really is hasn't shown any divergences. On this way up, it has been diverging a little bit, but realistically, there's no sign and symptoms that it's going to move. So over the next few days, we need to watch this. Again, US dollar is inversely correlated to the stock market. It means if the dollar is going higher, the stock market's coming down. If the dollar is going lower, stock market's going up. Hope that made sense. Okay, keep an eye on this. So what we look at it further is that on our PPO ADX crush indicator, these are bearish signs right here. Okay, if you don't believe me, they these opposing signs right here are bullish. When you have those bullish signs, generally it tends to move the markets higher. Okay, again, these are the kind of things that we will discuss in our community. This new channel that I made. Um, it's basically kind of a what I want to say. I want it to be a learning community. I wanted to, for those of you who join or decide to join or subscribe to the channel, I want you to learn. And that's basically what we're trying to do here. Okay. Now, gold. Gold has been under pressure after hitting all-time highs, right? It's just been very, very impulsive on the way down. Now we're trying to find some support right down here. Um, there's no letting up on the RSI. RSI, there is no signs of divergences whatsoever. And so, gold is highly manipulated, folks. All right, so basically, it's in the interest of the US government and the Fed and the central banks to keep this gold prices down, but we're still in that 2300, high 2900 level, which is basically near all-time highs. And so what we're talking about now is, let me get rid of these, is that basically the MACD is still, histogram is negative, everything is trending down negative. So I think there's more downside on gold, maybe all the way down to this area into the 50 SMA, into this trend line, not 50 SMA, but this trend line into this 50 SMA. Okay, so I think gold is coming down further, okay, at this point. And it coincides with the fact that they're trying to rally this market, folks. All right. Again, however, when you look at the PPO ADX, we are really far along with our kind of the bearish signal that we got. And of course, with that signal, that bearish signal, we went down. Guys, this PPO ADX works. Learn how to use it, folks. All right. Now, let's look at the oil. I think oil's going down much further. Okay. So basically, RSI is fully directional. Okay. And these boxes are kind of the target levels at which there's going to be some significant side-to-side trading motion before it breaks down. I think it's going down further. MACD is negative. It's fully directional. CCI is kind of oversold at this point, but directionality-wise, it's going down. Remember, CCI at these levels become what? Inversely proportional, or it becomes divergent. So at these levels, we can expect some bounces, probably coinciding with this 100-day moving average maybe next week. But we have all of these downtrend lines, and these are pretty impulsive. So you can follow these trend lines, and if it can't get above, it's going to keep going down, right? Until they can find more support. So that's the oil for us. Now let's look at VIX. I said VIX is going to come down further. Okay, here's the trend line. Here is the RSI that's fully directional. MACD is continuing to show negative strength to the downside. Okay, we have basically the stochastic again doing another death cross. It's going lower. I mean, PPO ADX is signaling that it was going lower, coinciding with this big, huge black bar. Okay, if you don't think black candles work on stock charts, I got news for you. It does work. Okay, so I think realistically VIX is going to come down, probably touch below the 1305 to 1235. It can happen very, very quickly, as you know. Okay, so be on the lookout. We are looking for the end of this relief rally if it ever comes. There is a possibility, because we're running out of time on also my 2020 analog, okay, that this may be it in this week. So this week is critical. Okay, and we can't argue with the market. I'm going to tell you as I see it. I used to in the past to argue with the markets because I wanted it to be and I wanted to be right. I'm just telling you exactly what we see at this point. Okay, now SPY. Here's the daily on the SPY, and this is what we want to know. The question of all question is this little doji candle that got stopped hard off of the 20 SMA here, or the 5 SMA. All right, you can see that there's a significant upside if it can break above here. And I'm expecting that. I am looking for that 515 to 520 level to the upper band of this Bollinger Band, okay? Because really, if you look at what the RSI is telling us, okay, on this way down, that there's been a positive divergence, which meant that it was bullish, and now we're breaking down this downtrending line. And so it'll probably get stopped somewhere right here, okay? And that's what we're looking for, okay? Now, if we are going to be resuming the downside, so what are some of the targets that I'm looking for? I've been looking for 512 to 515, possible extension into this 520 area, which is this space. That is where the unfinished auction is. That is where the unfinished business is, okay? That is where unfinished sell imbalances exist. Okay, if we can tag there, and I was hoping that it did that 2 weeks ago, and it's just been chopping. It's just been chopping in this level, and we're basically in this never-ending cycle. But the question that everyone's asking is it going to end right here and move down? My guess is it's going to go higher, probably on Monday and Tuesday, and then start taking out some of those levels. I'll be jumping for joy if it hits 520 and starts stalling. Okay, that's a very low risk, short entry area. Okay, do your own research. Not financial advice. I'm just telling you. Okay, now these are some of the targets that basically has, again, unfinished business in which the markets like to retest, backtest into those areas. Okay, now, so why do I think that we can maybe potentially bounce more? Well, we have a MACD crossover. We have the bullish histogram. Not all stocks are going to go up with it. I'm just telling you. The ones that are extended may start chopping, or the ones that basically popped on earnings are going to retrace because we're at that level where a lot of insiders are selling into this rally. Okay, CCI broke above. So there's some more upside movement coming. Stochastics is higher. Okay, and then of course we have this fantastic bullish PPO ADX. We have accumulation distribution. That's diverging, and as I always said, I look at the ATR not as the amount of dollars that it can move, although it has some applications in that, but at the opposite ends, like at the top, that is signaling whatever the primary trend was is ending. So what that means is we've been going higher, so there may be an end coming, but we have to make sure that we know that's happening, okay? I still think that there's unfinished business right up into this area, and until, Friday was a good start. We're kind of into this 511.29. We never really stayed above 512. I like us to spend some time at 512 to 515. Maybe if it gets impulsive and, fast in, fast out, go fast into 520 and then just sell off right there. Okay, that's how you got to trade. Okay, and so that's S&P 500. Here's the S&P 500 on the SPY on the weekly. Weekly is a different story, right? I mean, we've had this complete rally as we're diverging off of into that area, and so and we hit this 20 SMA. We found support, and now we're getting stopped dead by the 5 SMA. Okay, on the weekly, we have the unlike the bullish daily chart, we got a negative divergence on the MACD. Looks bearish, doesn't it? It's tale of two cities. This is warning you that there is a credence to the fact that the market is not what it seems right now. It's a dead cat bounce for now. Okay, but if we run out of time, okay, selling may and go away may not work. Extreme caution is advised at this point. Okay, so what I'm saying is I like for this to test into where do I want to see this? This is SPX, so like in the ES, just poke a little bit above this 5200, get up there, okay, and then come back down, okay? That is a low risk short entry area, okay, where everyone at that point is going to say the bull market's back, it's president cycle, blah, 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 okay? Look at the PPO ADX on the weekly, on the SPY. It's bearish, folks. Okay. When we look at the accumulation and distribution, we're at the peak of the accumulation, right? And so when we look at that, is there, positive divergence? We're stalling. Actually, there's a little bit of negative correlation there. And then we're at the bottom end of that top, right? And so, and it's beginning to sell off. So I think until we hit into this 200 range, okay, I can't say that we're not going to be bullish. Okay, you just got to be very, very careful here at this point. All right, so weekly is bullish and daily is weekly is bearish and daily is bullish. Sorry about that. All right, let's look at QQQs real quick. QQQ, same story. Okay, we have negative divergence on the RSI. We're getting stopped by the 50 SMA. Okay, question is that going to stop? We have all this space up here. I would love it if it would just tag right here so that we can just call the all clear signal to the bears who's been patient. And, both bulls and bears have been getting slaughtered the last couple weeks. So be careful. These are the kind of the levels. Pause it and just, mark it and see if it works. All right. CCI is positive, and so it means that we have some additional positive movement. And so that's why I'm saying we got to be patient and see what happens right here. Okay. Now, PPOADX again is bullish, okay? And then we have the accumulation distribution is coming down. Look at that, okay? As this thing was moving higher, we have a negative divergence. And what did I say about the ATRs? ATR at extreme ranges means there's a what? Trend change coming, okay? And what was the prevailing trend change? It was to the upside, okay? These are kind of the clues that you want to see. Are we really going to fail here, or are we going to go higher a little bit here into this range and then fail? That is the million-dollar question, folks. All right, so on the QQQ on the weekly, okay, we have a negative trend. We have a negative RSI. We're kind of stalling out up here on the weekly. Again, just like SPY, weekly looks bearish, okay? MACD is bearish, right? The CCI is telling you that trend is bearish, right? And then we got the stochastics coming down, and then of course PPOADX is polar opposite to what daily is saying. It's completely bearish. Where are we on the accumulation distribution? We kind of broke above on the accumulation part, but it's still in a downtrend, okay? ATR is trying to recover from the lows, so if we see this breaking above here, we're going to definitely see this continuing to come down because that is changing from the upward bias, okay? It's a very tricky market. That's why I put that sell in May and go away with a big question mark. You know I like to short, all right, for those of you that know me. Airbnb reports earnings, and I want you to really pay attention to these black candles, okay? And these are distribution signs. Negative divergence, okay? MACD is negative. We have CCI that's kind of recovered a little bit here, but that was a bona fide rejection. And that's something that you want to look at. All the travel sectors has been fairly bullish the last couple of weeks, okay? But, you know, stochastic, you know, we're going to chop around heading into the earnings. I think they report Tuesday. I don't know. Don't take my word for it yet. The PPO-ADX is non-conclusive right now, and so this is what gives me pause, but I think it's something that's worth watching. This distribution by these two arrows here is telling us something is going to happen. We had this kind of breaking out on the ATRs, so basically, you know, is this the end of the trend, okay? Kind of tricky, not conclusive, but it is reporting earnings, and I like these black candles. Something to keep an eye on, right? All right, so let's go into our Amazon. Amazon reported earnings and they popped, okay? Okay, and basically on Tuesday, and it popped and dropped and then start to go higher. And now, are they going to just start falling back down as did all the other ones like Google and Microsoft, you know, all of those other things that have been come before us. Right now, it looks fairly bullish on the daily, okay? CCI is kind of coming into that extreme range, so maybe this upside move is coming to an end, okay? And even though I think the market has a little further to go before it proves to me it's ready to be shorted, this is what I'm looking at. Now, inconclusive on the PPO-ADX side, you know, it has been bearish, but now it's trying to recover, right? You see that little cup right there? But this one really hasn't finished anything at all. It could continue to go down. Regardless, it bears watching on the Amazon, okay? I wouldn't quite go all in on it, but little pilot positions, this is what we're doing. Just seeing if we're right, okay? Because the move is coming to an end. It's like either going to resolve to the upside for the summer rally or grind higher, or it's going to have that sell in May effect. But I think we got to wait a couple of days to see if my ranges are taken out. Okay, so here's Amazon on the weekly. RSI is negative. We're really running into that resistance. This is stalling, folks. Okay, and so are we going to make an all-time high, or are we going to stall here and then go right back down into the 170 area? If this box breaks in the 20 SMA, we're coming right down to here, folks. And I think that's probably somewhat of a likely target over the next couple of weeks. All right. So we have MACD that's, you know, at the top end of the range. Is it forming the, you know, bearish breakdown? Histogram is negative. CCI is negative. You know, it's something that we need to pay attention to. Stochastics is stalling. Okay. PPO-ADX is negative. Okay. Meaning that it's bearish. Okay. And we're at the top end of the accumulation distribution. We broke above, but, you know, can't go much higher there. And then on top of that, we basically broke out on the weekly, right, from the bottom end of the range. Does that mean this rally is over and then we're ready to pull down? It doesn't matter where these ATR is. You can be at the bottom and then it changes direction. Then the primary direction changes. If it's up here and changes direction, same thing. Okay. Now, let's go into Meta. Meta reported earnings and market didn't like it. I said it would probably start filling that gap partially before failing. And so basically it's been, trudging up higher and we still have negative divergence on the RSI, but the MACD looks like it wants to make a positive cross. If it does, then we're definitely going to test these areas to the 480, okay? My guess is that it's going to fail as long as the market fails. We're in the right track on the SPY and ES on the futures, and that's where we're headed. On the front of the CCI, it did break the primary downtrend. We broke higher, but then it's running smack dab into this resistance here. So are we doing one of these? So I think Meta over the next couple of weeks has a really, really good potential to really start selling off. This is really inflated stock, and look at all that space down here before the next moving average, which may lend some support. Okay. So Meta on the weekly, again, it's like SPY and QQQ. It's like Tale of Two Cities. RSI is negatively divergent. We're coming down. We broke down the uptrend line, and now we're trending sideways. And I think it'll take a couple of weeks. But if we break through here, we're going to come right down into this 334 area. MACD is negative. Histogram is negative. CCI is negative. Guys, it means that if you give it patience, okay, and just wait for the market divergences to form on the shorter time frame, look at this. PPOADX is screaming that it's basically negative, right? And then we have the accumulation distribution. We've broken below. We're trying to backtest higher. I think there is a distribution going on. There is a divergence going on. We're at the top end of this ATR, and we're beginning to trend down, which means that the primary trend, which was up, is ending, folks. Okay, that's what's happening. Apple. Now we started some, I advised, that we want to basically take some pilot positions on this Apple earnings. And, we got a big, nice black candle. And then we basically had a breakout, obviously, on less than feared, but still terrible earnings on the heels of $110 billion buyback pledge. Okay, how long is that going to last? Are we going to go make new all-time highs and start taking out 129 to 200 level? Or are we going to chop here and then start breaking down, fill some of these gaps? My guess is it has to pull back. There's just so much, it really could not break above this longer-term downtrend line. And basically, I think the target should be somewhere around here. I don't think it'll fill the entire gap unless some sort of geopolitical event happens. But having said that, MACD is positive. Histogram is getting positive. Okay, it's pretty impulsive there, but CCI is at the extreme range. Generally, CCI at these ranges are negative. Okay, look at it. If you line it up, they've all gone downhill, right? You line it up, they've all gone downhill. Okay, you line this up, it's gone downhill. CCI is useful for those kind of metrics. Now, stochastic is negatively divergent, even though they've bounced off. I believe, that maybe there's some chopping higher a little bit next week, but it's going to come down. Buying more time is advised. As far as PPOADX, inconclusive right now. I mean, it's basically going higher, but I think it'll eventually make a bearish divergence on it. And also accumulation distribution. What is going on here? Okay, well, I mean, the market's celebrating, yet they're still dumping into this. Okay, and we're at the opposite end of the extreme. So, this is opposite end of this extreme move higher, so maybe we're going to have a downside movement. This is the type of analysis that you need to keep in mind. Here's Apple on the weekly. On the weekly, basically, we broke down on the down channel from the earnings, but I think, can it pop a little bit? Yeah, RSI could continue to rise as the price doesn't go up, but this is weekly, folks. And so we've had Apple's been selling off, and so this is kind of that relief rally, probably coming up right into this trend line. And let's look for a failure off of there, or if it hasn't failed already. And so we got this MACD that is basically, I don't know, it's pretty positive, right? It's bullish, okay, for now. It hasn't made a bullish divergence. Maybe it pops and then comes right back down. But you got to be patient with Apple or buy more time, okay? But Apple, May's just starting, so let's see. I'm just saying, not that selling May is not going to happen, but I think it's not yet, okay? Let this play out next week. This week is going to be critical. This coming week is going to be critical. And so CCI is broken out above the trend line, and we may be going back up here. Faster it goes there and fails, the more directionality we're going to have. Remember, whether you're buying calls or puts, you got to buy them when people aren't expecting it, and you got to buy it with timing and some extra time. Um, when you look at PPO ADX on this chart, on this weekly chart, it's inconclusive, although I would say that maybe it's making a bullish pattern. Okay, we'll see. We'll see. Okay, this is why you got to be patient, and then be patient and agnostic about what you want the market to do. Let the markets be your guide. Now, we did have ATR that broke above. Okay, so that means that it broke above from the bottom channel and going higher. So I would give this a little more time. Maybe this is all it is on the weakness. Okay, but we did break above higher, and it may be coming down. However, accumulation distribution, even on the weekly, is negatively divergent, which means that people are selling into this. Tim Cook is selling, folks, on this stock. Okay, let's look at the Microsoft. Okay, so Microsoft after earnings, like I said, this is why I'm looking at some Amazon, for a quick, sell-off. After earnings, it sold off, made a black candle, and then over the last week, it bounced higher and hitting right into this resistance area. RSI is negatively divergent, but we do have a MACD that's going up higher, so maybe we pop a little bit higher and then start coming down. We made, people that took this would have made money on this, and so what you want to do is wait for the pop and then see where the stall is. Right now, there is no signs of stalling, only that it may move higher in the next couple of days to this week. Okay, so you just want to let markets guide you. PPO ADX is positive, just like SPY is. Okay, stochastic was negatively divergent, but we did break above that downtrending line. Accumulation distribution, I mean, they are selling off, right? They're slowly but surely they're selling off, and we're at the top end of that ATR region. So basically, post earnings, we may be seeing a divergence forming on that. So Microsoft on the weekly, we're looking at a continued divergence. It looks pretty bearish from a weekly standpoint. So patience is necessary. Okay, just don't jump right in and start buying, the 0-day options and expect results. This requires patience and constant monitoring. Okay, when the timing is right. Right. Question is Microsoft on the weekly going to fail at that 80 MA and then start coming into these volatility boxes? Those are the targets where there should be some form of support all the way down to here. Okay, if the sell-off ensues, they're going to take these levels out pretty quickly. But the question is it sell in May or go away? Okay, on the weekly, again, just like SPY and QQQ and NASDAQ and S&P 500 futures, it is negatively divergent. Accumulation distribution, has been fairly at the top end of the range. It's really stalling out. But then ATR kind of broke above. Question is, do we go higher and then come down? Once that starts to break down, then are we coming down further? Okay. Now, SMCI. Oh man, SMCI is a gift that keeps on giving. Maybe we pop to this 20 SMA. Everything is stalling out. Look at all these sell volume. That is significant. MACD is directional, even though it is negative. Realistically, CCI bottomed, and then this is the type of recovery that it had. But the question is, can it get above there? Okay. Bears watching. There's a lot of meat on this bone if it decides to fall back further. Okay. And again, it's beginning to make PPO ADX. It's not developed yet, so you need to watch this. Don't jump straight in. Accumulation distribution is diverging. Okay, it's basically topping out, and then we are on the ATR breaking down further. So it means that this little rally that it attempted is coming to an end. And if it does, SMCI basically is AI's what I call the tulip bulb stock. And once it starts coming down, we're going to see 491 pretty quickly. You can bet your bottom dollars on that one. Okay, so SMCI on the weekly is even worse. I mean, RSI is super divergent and directional, and we have SMCI basically, having the negative trend line. Okay, this is the targets, folks, on the weekly. Think about all of these big moves that are happening. Volume is depleting. MACD just did a death cross. CCI is negative. Stochastic is negatively divergent. PPO ADX is super bearish. There's more meat on this bone, folks. And then, of course, accumulation distribution. Dude, insiders are selling here, and we're at the top end of the ATR. You do the math on this one, okay? And then coin, I like coin because it's pretty clear cut what's happening. And then what we want to do is know that the downtrend line exists and then another impulsive downtrend line exists. We did have a little bit of a rally last week. The question is if we break this trend line, we're coming right back into here, into the 100-day moving average, and then probably completing this longer term trend line. I think that's where it's headed in the short term. And so basically what we're looking at is that MACD is, the histogram is positively divergent, and I think that divergence was playing out last week. The question is how strong is it? And then the CCI is still in that downtrend line. We did break above. The question is, do we go higher from here? This is the key. You got to watch this. If it starts moving higher, then it's going to go higher. Okay. PPO-ADX is kind of, inconclusive, but I think it might be doing one of these eventually, which is bullish, okay? But I think it needs to go down further. Accumulation, people are still dumping this right now. And then we're at the top end of the ATR, which means that this topping pattern, which looks like it has the head and shoulders, okay? That is a bona fide head and shoulders, folks, okay? And so we basically testing that area into that trend line. Does it fail down? That's why I want people to keep attention to this. Okay, so that's kind of it for that. So let me talk about the summary. I still want to see ES 5150 to 5225 levels at least stay up there for a few more days, and then give me conclusive evidence that we are stalling out there to declare that it is safer to start buying some puts. The recommendation that I have for anybody that asks me is that, you have to play it opportunistically, okay? Whether it's you scalping in the futures market or basically doing the spies or whatever the case is, it's an individual case basis, okay? I think that you short the rips on these earnings and but keep your profit margins tight, because they can get away from you, as you know, okay? So these levels need to be visited and worked out before the next down leg can happen. And these are kind of analysis that we find with order flows and things like that. All the things that I can't tell you in this video due to time constraints, but there's a lot of analysis that goes on into this. I want you to watch the 10-year Treasury yield in US dollar for daily and intraday clues. We talked about that in this video. Higher 10-year Treasury yield is more bank stress and failure to come. Last week I said this, therefore Fed will try to manipulate the yield. They want to get this thing below 42.5, and we'll see how they do it, because it's like whack-a-mole, you hit one, the other one pops up, and the fact is that Fed will eventually save the credit market, which is the bond market. And so they will not, they will sacrifice the stock market to save it, but right now they're jawboning and that seems to be working somewhat. But you can see on the longer term weekly charts, it's completely bearish. Apple earnings provided a boost back into the mid-range of the market trading range. This is all it is. We're trading from about the 5,200 down to about 4968 level, what I call the gates of hell, right? And trust me, we will be going to the gates of hell. If that level breaks on the ES, look out below, right? But we're not there yet. So rip your face off rally is ending. This is what I said last week, but we must take out open auctions near SPY 512 to 520, which is equivalent to ES 5150 to 5225. It doesn't have to hit those levels, but we have been very, very I don't know, hesitant to get up in there. And that's kind of stalling. But on Friday, we did finish above there. I do believe in the pre-market, when the futures markets open up in the next hour and a half or so, it will basically, we will see potentially some gap up in there. So there could be some lucrative futures trading opportunities. Okay, so watch for relief rallies and bounces intraday. These are participation of breakdown areas. It still remains true. I said that last week. Earnings mid-season, okay? So we're still smack dab in the earnings. There's fantastic volatility that awaits and trading opportunities. Microchip, Disney, D-Dog, Rivian, okay? I mean, I have it all written down here, right? Upstart and Affirm, I want you to pay attention to those. I like Twilio. Airbnb, I mentioned that today. Roblox, I've been mentioning that a lot on my watch list. Pay attention to those. Maybe I'll do an earnings video on some of these, okay? Watch list, it's the same. Notice how they're not all in red, okay? Because I think there's an opportunity to the upside and to the downside if you're nimble. Beware of bear traps and bull traps. You saw that after FOMC. So you got to be fast, and you got to be fast with your profits, or you're going to give it all away. So the other thing is know your levels. Okay, understand how the orders are done. Know the pivot levels, and then know your indices. Okay, bring it all together, and then think about what these guys are trying to do, and think about the seasonality. Okay. Now, my stance is I'm neutral and unbiased, ready to take advantage of both directions while we await completion of the relief rally, right? And so, yeah, I think there should be one more downside coming, but this 2020 analog, we're running out of time, right? This thing officially runs out of time probably after May 28th, okay? And then we're going to have this grind towards the summer and into the election year, right? And you can bet that they're going to pump the markets higher, but that's another topic for another time. All right, so that's the end of my market analysis. Like us, share us, and above all, comment, good and bad. And thank you, and let's get some alpha. If you have any questions about my group, all right, um, email me here, okay? Otherwise, subscribe. Please let people know. Thank you so much. Okay, bye-bye.